What's up? I'm Dan Fredenberg, and this is another chance encounter. Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building. I'm joined today with Solomon Floyd. How you doing today, Solomon?
I'm doing great. Thanks for having me, Dan.
Excellent, excellent. And I got to tell you, I'm really stoked today because I have my very favorite audience member joining us today. And why is our favorite audience member here today? It's because this is a chance encounter where I interview commercial real estate syndicators. That's the buyers, the sellers, all those types. And why would I do such a silly thing? Well, part of it is because I know that the private deals, which is about 85% of exempt offerings, you're only allowed to talk to them talk about them to people who have a documented prior substantive relationship. And so that's part of what we're doing here. We got to find out if there's any overlap. But the thing that I'm also up to is I want to make sure that you can learn to effectively communicate on the subject of commercial real estate and figure out how my guest fits into the deal. But before we get too excited with that, Solomon, you want to say a word or two to introduce yourself before we get into the details?
Sure thing. Hey there, everybody. My name is Solomon Floyd. I am the owner of Reunion Investments, Archway Development, and the managing member of RVPP, Reunion Variable Income Fund. Looking forward to speaking with you guys about tertiary markets and growing yourselves into better investors and making sure that you're taking the right steps with passive income and setting a foundation.
Excellent, excellent. So we're going to get into the motivations part first, but before I do that, I got to say, but wait, check your eight. Solomon, I don't know if you can see through the camera, and if you like imagine like if there's a down at the
Yeah,
8 o'clock, there might be an awful red subscribe button that the audience member hasn't hit yet. I don't know if
I
you
got to
can.
hit that.
Yeah, 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 it's just a stupid joke I always do on these things. But
Listen,
anyway,
tell them.
exactly. But the five distinct motivations, I've met a whole whack of commercial real estate syndicators, investors, and whatnot. And even though we're all unique, I basically take people's why and reduce them down to these five different distinct motivations. And the reason why it's important that I know this is because it's a lot of work making a commercial real estate acquisition. It takes months, it's a lot of money. And so you got to have some indication that you're going to stick around through the entire process. And so that's why I get people's why this way. So the first one, this one's not me. People who are looking to preserve their purchasing power. That means they've already got a portfolio of assets. And then because they have ownership, that's how they make ends meet, is from the cash proceeds from the ownership. And of course, the name of the game is to be not selling any assets unless they're not performing. But if inflation rears its ugly head, that might eat away from the purchasing power from the cash flow. So they'll end up making another acquisition. Otherwise, if there's an asset crash or they can buy at a steep discount, that's the other time where they'd be motivated to make a new acquisition. But again,
Mhm.
that's not me. What I'm up to is trading time directly for wealth. I got a background in tech, and one of the problems of being in tech, specifically, just in case you're curious, it's the CRM industry, specifically the type that accepts credit cards. But the problem with making high wages or high salary is you're paying more in tax than anybody else. So as I started to do more CRM for people in real estate, it hit me that I should pivot to where I am getting rewarded in the form of deployed capital, aka equity. So that's what I'm up to in this exercise here. But a lot of people, especially youngsters, they get into commercial real estate because they hear about all the dollars and cents that are out there to be made. And really, what they're up to is trying to take control of their schedule. So that might mean fast tracking retirement, or it might mean working fewer hours per day, or fewer weeks per month, or fewer months per year. Who knows what it is, but that's what some of them are up to. But that's in pretty stark contrast from the next group, their ambition is what's really passion bringing them to do what they do. They want to buy their entire hometown. They want to go for that generational wealth to make sure that their great grandchildren never have to hold a day job. And that's why they're making acquisitions. They're fantastic because they'll be hustling into their 90s. But this last group, they're also going to be hustling as long as they can. But their motivation comes from the fact that they picked a sector of society, or maybe it's the environment, or maybe it's animals or something, but they realize that to make a really big impact, you have to have a substantial financial backing, and that's why they're making these acquisitions. So, Solomon, of those five different motivations, what combination of those really jumped out, or you feel describes you best?
Yeah, so I like to say that I land in the helping people who need it sector. And the reason being is I target a niche group of individuals who need what I provide for them instead of going to the markets where people want what I provide for them. And I feel as though investors who understand the difference between that, the difference between the primary, secondary, and tertiary markets can really make a big difference in the way that people live, but also make really good money on the interim. And that's key, right? I don't want to go to a market where I'm going to be competing with everybody else for the exact same property that's already overpriced, that isn't going to serve anybody who needs it, more of somebody who just wants an overpriced house. That's not my market. That's not my group.
Excellent, excellent. And I'm sure we'll get to that shortly as far as the specifics go. But my next question has to do with tolerance for risk. And the reason is because some people, especially young people, they'll get into this business thinking that there's all sorts of money in it, and they won't really recognize that there are risks involved. So I like to ask this question. So, Solomon, please fill in this blank. There are many popular investment asset classes, but I think blank is too risky. What's too risky for you?
Primary markets are too risky for me, especially those that are not centered around a big source of industry. Primary markets are consumers, not producers. So consumption is a very difficult tool to measure by. And for sure, if you're looking for something steady, primary markets are not steady. They are up and down, and up and down is good for appreciation, not good for cash flow. So you're either picking one or you're picking the other. But that's what I would say that fill in the blank is primary markets are going to be a little bit more risk, have a lower, or I guess higher risk tolerance, or have a, I guess, lower risk tolerance than any other markets will, purely because you're banking on the appreciation and you're banking on people's ability to get debt. And that's something that I don't know is the best.
Oh, you muted yourself accidentally. So actually, yeah, but we got pretty much all of it. The other problem too is that it's also expensive. I think you're competing with a lot of people's egos. Like people want the skyscraper or whatever it is with their name on it, but like it's not really feasible pretty often, right? That's where you were going.
Yeah, I mean, you got to get there, right? And so with that, it's super heavy on the debt side. Don't get me wrong. That's the good thing about a primary market is a bank's going to give you a lot of leverage on it, but only because they know they can take it from you and it's in a good location.
Hmm.
So looking at that, right, it's a matter of what do you really want, right? If you really want cash flow, then target areas that are going to provide cash flow. If you really want to flip, then target people who can afford affordable housing, because that's always going to sell, right? Don't get me wrong, it's cool to sell $1 million mansion. It's really cool to put that on Instagram, right? Do that once or twice a year. I'm not saying don't do it, but make your focus on helping people who need affordable housing, and then go build some mansions every now and then. I think that's sort of the thing a lot of people get hung up on, you know?
I love that. I love that. And it's pretty cool that you got specifically into real estate right off the bat. But in every episode of Chance Encounters, I pull out the Dan Does Deals Commercial Competency Cube. You can go to dandoesdeals.com and download your own copy of it for free. I don't even ask for your email address. And from a marketing perspective, that's the worst thing you can ever do is give out your freebie with no contact information. But the reason why I do that is because I actually want you to have no barriers whatsoever to go into the site, printing out your own copy, learning how to confidently discuss the subject of a commercial real estate deal, and then you can go ahead and practice on your friends and family. But you just go to dandoesdeals.com and print it out. And in every episode of Chance Encounters, I go through all six sides. So the first one that I'm going to go through is the repositioner. A repositioner looks at a bunch of different properties and they do a bunch of paperwork. What's the paperwork all about? Well, there's a fancy word for it. It's called underwriting. When you underwrite the deal, that means you're doing the math, you're doing the arithmetic, and you're making a plan for what to do with this building. What changes are you going to make to the property so that it becomes a more profitable business? And one of the first things that every repositioner has to do is they have some investor relations that they have to do, which is also just dealing with financiers. Financiers are people who only deal with cash and paper. They do not get involved as a GP, but the investor relations, that's a key part of every repositioner. And the reason is because if you can get a more advantageous loan, that goes straight to your bottom line. So that's one thing repositioners are always looking for. But let's just say they got the deal in mind, in hand, they're ready to build the team. The first place they're going to look to try and find upside is going to be the operations. How can they stop those Benjamins from going down the toilet? But of course, there's more to operations than just that. And of course, it's part of it is asset management more than operations themselves. But one of the things that I bring to the table is because of my marketing background, at least if we have a vacancy issue, then I can hop in and bring more insight. And that's one of the things that I bring to my GP teams. The other things are automations. But often operations, cutting costs there, that's not enough upside for the repositioner. So they're going to get a contractor team involved to do a value add, or renovations is what some people call it. And one of the problems with doing all these renovations, spending money on contracting and upgrading the units, is that it's a very expensive endeavor, and you have to have somebody to keep an eye on it, which is a problem if you're like me. See, I'm from the internet, so I need locals. I need boots on the ground. I need somebody who is maybe like an hour or two away from the place, because that's not going to be me. I'd still be stuck at an airport in 1 or 2 hours, right? So we need to have this team here as a repositioner. You put that all together, you turn around to the financier and say, all right, I got the deal in hand. Let's say it's got 350 units in it and it's tens of millions of dollars. Hey, you don't happen to have, say, tens of millions of dollars you want to lend us, do you, financier? Well, one question on the financier's mind that I haven't mentioned yet, and they gloss over this a little bit in a lot of coaching programs, is who is your sponsor? Who's your sponsor, and what's that all about? Well, even if you are, let's say, a physician, you got some wealthy pals who want to take over like the 350 unit apartment complex. If you want to be eligible for the loan, somebody in the fold has to already own a similar asset, or else the answer is just plain no, even if your name is Elon Musk or Jeff Bezos or something. But you also need a certain amount of liquidity, and among the ownership team, you'd need a balance sheet of at least the amount of the loan. But if you have all those pieces, you got yourself a commercial real estate deal. So Solomon, it sounds like you're on the repositioner and probably a lot of investor relations side with the financiers. But how would you describe your most likely contribution to your next deal with those sides?
Yeah, so I guess as the repositioner, I'm the one who I guess would find the property, find the deal, and kind of think, what could this be, right? It's either going to be multifamily, single family. It's going to be something that it currently isn't. And then on the financier side, I'm probably not really the best side of that. I honestly rely on a lot of other syndicators, and I'll partner with other joint venture syndicators to make sure that I am not exclusively the only one raising money, right? Because if I'm finding the deal, managing the operations, it's a lot. What I actually really provide a lot more people is the boots on the ground concept, and it's really setting that up. Because I'm a pilot, it allows me to get to markets really easy, where we can go see problems, go see things really, really heavily, and kind of be really in the face of the property managers. But I'm also going to establish that local presence where we do have our property manager, we do have our local contracting group, we do have our local insurance agent, just to make sure that we are set for the best possible deal to not run into as many issues or as many hiccups.
I love that. That's a great answer. So let's get on to the buy box then. And when commercial syndicators, investors, people like us are asking, hey, what are you looking for? What's your buy box? What's your ideal property? That we're really asking for three main things. First one's geography. Which states, which counties, possibly even which neighborhood. Okay, it's all going to matter. Second one's
Okay.
going to be size. We're talking about multifamily where we use unit count. And the reason why that's so important is because you're going to have a different group of people taking over 15 unit apartment complexes compared to the 150, 350 unit ones, right? So the size definitely matters. In some forms of commercial, it goes off a square footage, like an industrial, but unit count is what we usually use here because most people are in multifamily, as my guest. But the third one, it has to do with they call it class, and I separate that into two separate words because I think it's not very clear. The first one, it means the condition. So the condition, it's how old is the building? Is it beat up, or is it, more or less, in good care, good maintenance? Is it full of amenities, or is it really, not anything to write home about? That's the first meaning of class. And the other one I also call area. And what that has to do with is what's the crime rate like where the property is located? What are the school districts like where the property is located? What kind of traffic is it actually getting? And both of those two meanings of class are rated the same way as in grade school, where it's A plus at the top, and then A minus and B plus and so on. So Solomon, as far as the sweet spot goes, what's easier for you and your team to say yes to and more difficult to say no to?
Yeah, so it's easier for us to say yes to tertiary markets, especially those centered around military bases, prisons, or agricultural centers. Again, primary markets are not producers, they're consumers. So if I can target the areas where primary folks buy their food from, I know that I can effectively maintain a certain level of rents and purchase pricing for those people who live there without trying to shoot things to the very moon with my pricing. So that's always going to be key. The other thing we look for is steadiness, right? We call it what our trend line looks like. So if our trend line is doing up then up then down, we're going to stay away.
Oh, you muted yourself again. You're going to stay away from?
Yeah, just there's a lot that goes into trying to plan that out and trying to bank on appreciation. We're really concerned on cash flow more than anything. A lot of our projects are either going to be torn to the ground realistically, or we're going to go buy land. So we don't do a lot of value add, which doesn't really place us into a class when we purchase. But I'd say
Mhm.
by the time we're done building what we're trying to build, I would think of it as an A-class property comparatively to what is there. Looking at crime rates and things like that, those are solutions to solve for me. So if there is a lot of crime, it means that people just don't have a lot to do. So, or there's not enough income for people. So
Mhm.
it's all about creating more income, more jobs, more opportunity for people. And you can do that through real estate, which is fantastic. So if I build a bunch of apartments, I'm also going to go build the coffee shop, the dry cleaners, the daycare. I'm going to go build these things that will allow people to kind of have some sort of income, right? And start saving up and grow while also making sure that I invest in the local community college and I set up programs to teach kids how to, become electricians, plumbers, carpenters, whatever. So that way I'm not relying on this area being a crime-ridden area. If I'm going to go there, I'm going to change everything about it to make sure that the people who are living there aren't kicked out and removed because they're crime statistic, right? I'm going to make sure that they grow and have the ability to then buy homes from me 5 years, 6 years down the road. So that way they have their own chance of growth and freedom.
Wow, that's an amazing answer. And it's really a community building is what you're really focusing on. That's fantastic. But my next question has to do with who the best people are who could reach out to you, and I figure that's who you're disproportionately well suited to help. And me personally, like everybody has their own unique skill set, and everybody is so friendly in this industry because we're always building different teams. We're eager to make referrals. But, me personally, because of my unique skill set, I generally am looking for the sponsor KPs. And then recently, more and more of the locals are the other parts, like, the local who also would have a hand into repositioners. But the reason I'm after the sponsors is because I've been scaling businesses for 12 years. And so really for somebody like me to make a really big difference, you have to have somewhat of a foundation. Whereas when you're first getting started, you need people who are going to be hustling 80 hours a week or something like that. And that's not going to be me.
Yeah,
Yeah.
yeah.
So Solomon, how about you? If you have any 506B deals going on, then you really shouldn't entice investors. So if you have any donuts in your car, make sure you keep it away from the camera because I know donuts are enticing for me.
Yeah.
But yeah, but you could say talking to beginners, but who on the die are you most eager to talk to? Who can you help disproportionately more?
Yeah, so I think who I can help more are those boots on the ground people, and definitely the KPs and or the LPs, primarily the sponsors who just don't have deals right now. Those are some of the things we can make happen. I don't have a lot of 506B deals. We primarily just do joint ventures with syndicators and then let them go out and raise money as best as they see fit. So if
Mhm.
you don't have any deals or you're having a hard time finding or you're exclusively looking in primary markets and aren't finding what you're looking for, then I'm the person you'd probably want to call, or we can at least try to figure out what you're looking for returns and sort of if my deals make sense for you. The easiest way to get a hold of me would be to go to booksolomonfloyd.com. Real simple, real easy, but you can get a time with me, 15 minutes, 10 minutes, whatever. We can talk through some things and kind of get a better sense of what it is you're looking for, what it is you want, and what it is you're looking to provide your investors. So that way we can make sure we can work together.
Excellent, excellent. And my next question was how to reach you. You just mentioned the domain, so you can just rewind that. But for me, I got the distinct last name, so I'm really easy to find on LinkedIn, which is where I spend most of my social media time. But if you scan this code with your phone, then that'll bring you to the FAQs page of 506BME, which is the service that I offer for syndicators to document your substantive relationships with the other investors, which if you ever get audited by the SEC, that's what they're going to be asking for in a 506B. So that's how to reach me. So the only thing other than thanking you, Solomon, it's actually not for you. It's there's a PSA that a public service announcement I need to make for you in the audience, which is if you've been watching this episode and you've been experiencing searing pains in your eyeballs with like migraine like symptoms, it's probably the hideous red button under my hand over here. Okay, it says subscribe on it, and if you hit it, if you just click on it, then it'll turn gray and all of that, it'll stop. Okay. And the other reason why I want to let you know about this is because if enough people hit it, then YouTube will start paying for these videos instead of me, and that would be really awesome. And what it really means is that my videos might show up on your list of suggestions, but you can feel free to ignore those suggestions. I just appreciate the fact that you spent this time with me. Just like Solomon, I appreciate you joining me today. This has been great getting to know you a little bit better.
Absolutely. Thanks for having me, man. This has been really fun.
Awesome. Thanks. Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay. Are you already logged into 506BME?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506BME, everybody.